All right, so really quickly, I'm just going to put together a script that compares the up volume to the down volume. Just out of curiosity, when you get a tick in up volume, you see that oftentimes the stock is moving up. Well, that is the up volume, and then when you get the volume that corresponds with a downward movement, then that's down volume. So we're going to compare the two and see if we can make any type of script that makes sense or provides extra logic to the chart. Okay, and again, this is what I love about the market. It keeps everything in balance. It keeps everything so mysterious that you would hardly be able to pick it apart if, without X-ray vision or without having some super computer algorithm best guessing type. I mean, it's amazing. Look how balanced this is. All right, so excuse me, we're looking at volume up and volume down. So again, volume up is when you have an uptick in the price, when maybe the ask is being hit or when the market is moving up. You have volume up. So if there's a greater number of volume that pushes price up, then that's represented by volume up transactions versus volume down transactions. But if you look at these curves, they relatively do the same thing. So as this curve is up here and it kind of slopes down, this one is up here and it kind of slopes down. Has a peak right here, has a peak right here, dips down, dips down. So what I'm tasked to figure out is if there is some type of relationship, positive or negative, between volume up and volume down, or upticks, downticks, and then make some type of, like I said, or if there's an imbalance, right? So as the price comes down here to this lowest point here into a potential reversal, I gotta call a trade station. Something's up with this platform, but as it's coming dipping down and finding this demand zone in here, do we have some type of imbalance along this line here, right? So when we drop down here, is there some type of imbalance? And I can't really see it, right? Because again, it drops down here, drops down here. You'd almost think that you're looking at the exact same chart, just one is blue and one is red, but they're not. If I click on this and I go to this line, you see that it says volume up is 135,610. And if I go up here on that same line, it says that the volume down is 171,634. So they are different values. It's just so balanced. It's so maniacal that you'd barely be able to tell that there is a difference. So I want to do one more little script here to look at the relationship between the two, and then this will actually allow us to see on a very microscopic type level what the differences are, because there are differences. And again, if you're using some type of computer to help you with your trading, then this is the type of computations that you might want to come up with. So let's see what we can come up with here. Let's see, and all right, so we're just going to do plot one. It's going to be we're going to do a ratio. Which one is higher? I think that the volume up is higher, or at least in this particular market. So we're going to put the lower one on top. So we're going to put up down ticks over up ticks, and then we're just going to plot that. And so then this should give us a what do I call that? I know I need to change the name though, for sure. I need to change the name of this. Change the name of this, ticks or volume. Okay, ticks or volume, where did it go? Don't know where it went. Edit studies. Ticks or volume here, data off. Must be, must have a denominator on the bottom. Alright, so upticks. So we got to say if upticks is greater than 0, and well, you don't have to do downticks, then that. Okay. Alright, so now come back up to edit studies. With anything in TradeStation, you can't have 0 as the denominator, or it'll kick it back and it won't let you use it. So now that we don't have 0 as the denominator, we can turn this back on. Alright, and then close. Let's see. I don't know what's, this needs to be a line, and that'll be the default. Yes, and scaling 5, is it 5? Okay, 5. Alright, so that line is pretty tight though. I don't know why scaling wise It's not, let's see, it needs to be off of the subgraph. Okay, there we go. Alright, now, if you look at that line down there, that line is a relationship. So the relationship that we're looking at, having the volume down is the numerator and the volume up is the denominator. This is the ratio. This is the relationship here. This squiggly line here. So, but we can kind of, because it should be roughly a 1-to-1 ratio, right? Something like that. Yeah. All right, we're going to plot 1 on here, and 1-to-1 ratio just means that for every bar that you have here that's at 567,000, this bar is going to be 554,000. If this bar comes down as half, then this bar will be half. That's a 1-to-1 relationship. So plot 2, just going to plot 1. That's just the value 1, so that's this line here. Alright, and then just make that a little larger there. And we can change the color on that. I like yellows, they stand out to me. Okay, so you see that mostly the relationship here sticks to that 1-to-1 relationship. It's very close to that one line. You see here it dips below it. Here it dips below it. So I'm looking at these dips, and then I'm also, as I'm looking at these dips down here, I'm looking at this relationship up here. So let's just go ahead and get the those two off the grid, because now we've looked at them and we saw what we wanted to see. Volume up versus volume down. Not sure if this is very useful to me. We're just we'll leave it up. Okay, so let's sip up my coffee down. All right, so when we got this drop down here and we found we found demand down here, we did do a pretty sharp dip under the 1. What happened when we got dipped under the 1 here? It went up. That bar is up. Yes, that bar is up. However, the question is, because this bar does not have to complete before this. Well, I mean it does. The final volumes have to come in before this period is actually plotted, is actually set in stone, right? But this number can come on down low. It can come on down low as the bar is being created. So that may have happened at the beginning of this bar where it dipped down, or this dip down that low could have happened at the end of the bar. Whereas if you bind at the end of the bar, then well, visually you can look at the chart and you already see that the candle is moving bullish. So we want to find, like I said, we want that X-ray vision. We want to find out how we can get into position as or just prior to the chart moving in its intended direction. Okay, so we got a dip down here. What's happening up top? Again, we got a nice bullish move. However, we probably could have saw that on the chart. Over here, we go up and it moves up a little bit. It's not a huge move up. Same thing with this candle. This candle, there's a little move up there. So, I mean, but I would say more than not, when we're seeing those dips below the 1, more than not, when we're seeing these dips below the 1, we're getting some type of retracement. So, I mean, I think that could just be kind of confirmation confluence for your trading, not in, you know, an entry signal by itself, if you will, but just a just an idea. Because again, yeah, let's see. Just thinking about the logic here while we're getting lower than 1. Lower than 1 would mean that, let's see, to get a 1, to get lower than 1, to get lower than 1 means that our numerator is smaller than our denominator. So to get lower than 1 would mean that the volume down is less than the volume up, right? And I guess, you know, that makes sense, because if the, or, you know, we could say in reverse that the volume up is, and maybe that's what we have to look for. It's either the volume down is less than the volume, on average, the volume down is less than the volume up, or on average, the volume up is greater than the volume down. And those are two different things. So let's let's see. All right, so if we did volume, if we're trying to solve for volume up in a formula volume down over volume up, then we'd have to divide, we'd have to take the ratio. Plot 3 is going to be, I don't even know what I'm looking for here. I think I'm looking for if volume up is greater than the average of volume ups. Let's try that. All right, so if upticks is greater than that ratio, and actually I think I'm going to take that ratio and maybe even smooth it out. So we're going to make the ratio equal to value 1. Down ticks over upticks. Alright, if upticks is greater than value 1, and that's just the ratio. So value 1 upticks it'd have to be then downticks over, that's just solving for upticks. Well, we have to smooth it out though. Let's see. Let's smooth it out. Value 2 is going to be equal to the average of value 1 over, let's say, 6 bars. And then this will be over value 2. Alright. Then plot 3 is equal to, we're going to say value 2, and then we'll just make that as a cross. Unless I need to make sure that we don't have something in the denominator. Yeah, if upticks is greater than downtick. See, so first of all, again, we can't have value 2 being 0, so we need to only execute this this function if value 2 is greater than 0, or if it's not equal to 0. So if value 2 is greater than 0, then begin this down here. Again that. Again, then plot value 3, end. Okay. And we still have 0 in the denominator. I imagine that we can do our average here. Let's see. If value 2 is greater than 0, then begin. If upticks. No. Yeah. Okay. Value 1 to 6. There should be no problem with that. But I think having a problem with it. I said if it's greater than 0, well, we'll say if value 2 is not equal to 0. Try that. Nope. Didn't like it. Okay. Value 1 is down ticks. Okay, we're going to do this. If upticks is greater than 0, then value 1 is that. Else value 1 equals 0. I think we can do that. Yeah. Okay, so we can do that. So the one line, which should be the even ratio, is this yellow line here. The black line is the rough ratio, bar by bar, for the volume down ticks over the volume up ticks, and then the blue line is the smoothed line of this black line. All right. Excuse me. All right, so then I had this what plot did I have? Plot 3, plot 1, plot 2, plot 3. If upticks is greater than downticks over value 2, then plot 3. Yeah, we're gonna plot 3. You know what? I didn't plot this smooth. I need to plot the smooth. So plot 3 is equal to value 2, which is a smooth line, and then this plot 4 we'll make this red. And that's why you make things different colors, so you'll know what's what. I need to do that. And then this red line should not be, should be across, and we don't want to connect it. All right, so you see those crosses there? That's where that's where the upticks are greater than the average ratio, the smooth average ratio. Okay. So we have it here. But again, visually, we already can see that this bar is moving up. So we want to get in before that's happening. So I don't think that this script really helps us with that. I mean, this thing is firing off multiple times, so script's not helping with that. If value 2 is greater of upticks is greater than I'm gonna say like 1%, or that's 10%. If it's greater than 10%, okay, so we have less of these. But again, they're happening where I mean, with the exception of this one, which looks like a breakout, but again, if you're looking at this breakout here, if you're looking at this as descending resistance, you consider this to be a potential breakout. And then if you're looking at this line from here to here as another descending resistance, then this will be the breakout. So visually you can see that on the chart. However, this just kind of gives you confirmation of what you're looking at. So I don't know if that's, like I said, terribly helpful. Again, from here to here, you can see that that's a bit of a descending trend, and then this is a breakout bar, and we have the red cross up here and there. So and then here you see that there's a little bit of a slight increase in resistance line there, and then this would be the breakout bar, or you can consider it horizontal if you want to, but it looks like it's more ascending resistance. But then here you have that breakout candle there too. So and that you have it here as well, right? But you'd be looking at that, and then that's only like 2 bars, so we know that's not really creating a base. It's more of a continuation than anything. And even with the continuation have shorter they have shorter risk reward ratios, and that's one of the things I'm learning, and I think that's why I'm really starting to focus more on reversals than I am continuations, because continuations they are essentially just breakouts. And you know, so I think that they're going to have a higher failure rate, but that'll be something that I will be tracking in my pivot tracker, so that I can kind of have a better understanding of what the relationship is between risk reward and different strategies. So here's where I'm kind of tracking all of the pivots, what time the pivot happens, what kind of pivot it is, if it's a low or high, what part of the range it bounces off of from prior levels, and then just some other information about it. You can see here again that so far the data that I've collected is about 53% of the pivots, the pivot lows, the swing lows happen at the low of the consolidation. So if you consider that this is a sideways consolidation before a move up, then this is my beta here, which is my low. This is my beta here, which is low of that. So I'm just saying that most likely, and I'm just saying this is saying that 53% of the time that when you're going to find another swing low, it's probably going to be on this level here. It's not going to be at this level. That level is what I call my consolidation alpha, and that would bounce 26% of the time. And now we're talking about major swing levels now. I'm not talking about intrinsic continuation or anything like that. We're talking about major swing levels. So even if you just look at what happened on this day on 11/24, that is around the 234 level. We move over to the right. Even as it comes over to the right that afternoon, 1 o'clock, it even put in a kind of a hammer bar there. You move on to the right. Did it hold it, or did it move through it, move up? A little bit of retracement up. Again, retracement up. Pre-hours, it wicked through it and then popped back up. So yeah, so this is the level that we identified just earlier, and it hit it, and it super wicked up. So don't know if that means that it's going to continue up. I imagine that it is. Like I said, it looks like it's the closest area of major demand. So the question is, how far will it go before it decides to reverse? So I was already into a position, and so I put my stop right here at about 238, and that's just prior to this high here. Because again, if you're going to find major support for demand at the betas, then at the alphas you're going to find the resistance. Oh, look at that wick! Ooh, Jesus, that was a huge wick there. All right, but anyway, let's see. I got some other stuff to do before I sit down to this all day, so I will have to come back to this. But I'll keep playing with these crosses here. And again, I mean, depending on what you're trading, if these crosses work for you, then they work for you. If they don't, then they don't. But it really depends on what you're trading, when you're trading it, and I mean, you got to be very specific. and that's what I'm learning. So okay. But I mean, the majority, even if you got into these for a scalp, right? If you're looking on this 2-minute time frame and you see this going on, but like I said, that's what I'm going to, as I'm sitting at the chart today, I'm going to let this run, and I'm going to see when this cross shows up. Does the cross show up at the bottom of the bar, and then you can catch the entire bar? Well, if so, then that's a very low risk to reward relationship, low risk to reward. So you want to have that higher reward for sure. So what I'm saying is, if this cross shows up at the end of the bar's formation creation, then at that point you're at the top of this bar, and it's going to retrace, and it may move up, which is great. Maybe you get a 1-to-1 risk reward relationship, but it'd be great if you could get in at the bottom there, and then you have only that for your stop, and so your risk to reward relationship is not just 1-to-1, it's more like 1-to-4, 1-to-5. So again, we're just using scripts for confirmation or confluence. Guys, I hope you enjoyed or got a little something out of it. Maybe it helped you with your coding. Again, one of the main things to take away just from the coding part today is that you cannot have a 0 in your denominator. So, and I don't think that even like here, where was it at? Even here, when I declare value 1 to be downticks over upticks, or downticks over upticks, it did not want to compute this, even though I was not using value 1 as the in my script. So watch this. We're going to say value 7 equals, let's just say the open. All right, and then we're gonna verify that. Okay, that's fine, right? So this still popped up. The study is still good. Okay, now we're going to say value 7 is open over 0. Now, we haven't done anything with value 7. Value 7 has not been used in this script at all, other than just computing it just so it's stored, right? But I don't think that this script wants to do anything with a 0 in the denominator. Let's verify it. When we verified it, we lost the script, and we got this error that you can't divide by 0. So yeah, again, you cannot use 0 in your denominator. If you have it anywhere in your script, even if you're not using it, even if it's a part of a condition that you're not actively using, it will not let you, it lets you verify the script, so I could verify it, but it won't let you actually use it. All right, so now I will just verify again, and then I can go back to edit studies and turn it back on. Status on, close. All right, came up. All right, guys, this is Eric. I'm out. I will holler at you later. Peace.